Hi, it's Carl Allen. Massive warm welcome to today's training. I'm really excited because you're likely going to be a real estate investor and you're curious or even interested in shifting your skills and your experiences into buying profitable cash flowing businesses. Now, there are some parallels between doing real estate deals and doing business deals, but a lot of the detail is very different. And we're going to get into that into today's training. So I'm going to switch to slides now because I want to take you through some information and share a lot of case studies and data and examples with you. But then I will see you at the end when we do the recap. So here we go. So today's training is all about how to leverage your real estate experience to close and own cash flowing businesses with little to no external capital from you going into those deals and have the seller thank you. So my big promise to you for this training, we're going to go for about 45 minutes. It's all about you shifting from real estate investing into business buying and business investing. And it's how to buy profitable businesses with no personal money and without having to run those businesses that you buy. And the three biggest questions that most real estate investors ask me when I speak to them is, number one, what are the differences, Carl, between buying businesses and buying real estate? Can you walk me through that? Number two, how do you find unlimited distressed deals? And when we talk about distressed deals, we're not talking about businesses that are in trouble, they're running out of cash, it's going to take a lot of work to turn them around. We're talking about distressed owners. So these are cash flowing businesses, but the owner is highly motivated to leave. We're going to get into that as part of the training. And then number three, what's the business buying math? I know what my returns are from real estate, whether I'm flipping or whether I'm getting yield in terms of buy and hold. How does it work with business deals? Walk me through that. So that's what we're going to do. Now, there are a lot of benefits to owning businesses. There's a lot stronger cash flow. There's a less upfront risk. So you can do deals with very low closing payments, or in some cases, no closing payments whatsoever. There's abundant inventory in the business buying market. There's over 2.6 million small businesses for sale right now. I'm going to show you the data. And what's really awesome is some of the strategies that I will share with you for deal origination. There's practically no competition when bidding on deals. They're off market. You know, imagine that in the real estate space where competition's at an all-time high and inventory is at an all-time low. You're getting outbid all the time on deals. That doesn't happen with business acquisitions, and I'll show you why. There's a much faster break even when you're doing these deals. And then with real estate, the growth is limited pretty much. With business acquisitions, the revenue growth opportunities are completely unlimited. You can grow that business and grow that value as fast as you want. So I've done a lot of deals and spent a lot of time with people like Robert Kiyosaki, who called me the rich dad of buying businesses back in October 2018. I've done some work with Grant Cardone, with Jeremy Harbour, and then I have a really awesome student called Kevin Dillon, who you can probably resonate with. He's a former real estate investor, so did a lot of real estate deals, got kind of bored and frustrated with that industry, turned to me as his coach, and he started acquiring businesses. And he'll close 11 deals by the end of January 2022. So he's almost there, and he's building a massive group of medical companies down in Australia. I've also advised Agora, and I've pitched my business buying strategies to some of their $100,000 a year real estate clients. James Lamb was another former real estate person that got into business acquisitions and has done fantastically well, as was Peter Ballantyne, moved out of real estate and started acquiring supplements businesses. But what's interesting about these people, one big caveat, is all these people took action on the type of training that you're going to see today. Because if you just learn this stuff and you don't act on it, nothing's going to happen. You're going to be in the exact same situation you are now. You're going to be continuing to chase real estate deals without you having the opportunity to truly leverage and get into the business acquisitions market. So definitely implement what I'm going to share with you today, because execution is what truly matters, guys. Execution trumps knowledge every single time. You need to apply what I'm going to share with you today. So before we get into the training, let me tell you who I am if you don't know me. So my name's Carl Allen. I've been a corporate deal maker and a business buyer for almost 30 years. I grew up on Wall Street, Bank of America, then went to business school, spent some time in private equity. Then I was a corporate M&A guy for Hewlett-Packard. And then since 2008, I've been buying, growing, and selling my own businesses. And I've also been coaching thousands and thousands of deal makers all over the world, how to acquire profitable small businesses, how to grow them, and how to sell them for explosive returns. So I've done a lot of deals, $48 billion in deals, 29 years, 1 million plus employees that I've impacted through my deal making. And I've closed over 330 deals in 17 different countries and in 18 different industries. I've worked for huge companies. I've done deals for Microsoft, HP, IBM, but I've also done a lot of really, really small deals, which is where I've been focusing all of my time and my energy over the past 14 years. And I've even written a book, which you've probably read, Zero Down Business Buying Secrets. So let's get into the training. So turn anything off if it beeps. I need your full attention on this training because it will absolutely blow your head off. So let's get into question number one. What are the differences between buying businesses and buying real estate? So the real estate market, particularly in the United States, is, in my opinion, a bit of a mess. When we talked to Reality Track last year, 48% of investors actually viewed the market as worse or much worse in 2021 versus 2019 or 2020. And 63% cited crazy rising valuations and 75% cited a lack of available inventory, especially inventory that can be financed in a creative way. And one of the drivers of that is foreclosures. Because of COVID and all the government interventions and support, foreclosures are down 70%, and it's the lowest levels on record. And I know from my own real estate investing, foreclosures were typically my favorite go-to strategy for finding deals. And that's pretty much evaporated now. And it's an absolute fact that inventory in the real estate market is at an all-time low. The business buying market, guys, is absolutely phenomenal. Right now, there are 2.66 million small businesses for sale today across these four countries: UK, USA, which is clearly the largest market, Canada, and Australia. And what's crazy is only 1 in 11 of those businesses will sell in the next 12 months. Let me explain that. So I'm on the TV a lot, I'm on radio, podcasts, in the media. One of the questions that I get asked all the time is, Carl, how many businesses are for sale and how many sell? And there's no real data out there. So I actually had to build my own model and build my own algorithm. And this is a data source that I update pretty much in real time. So if you look at those four key countries I just talked about, there's about 39.2 million small businesses in existence. These are businesses sub $10 million in annual revenues. And as of right now, today, there's just over 2.9 million of those businesses for sale. So it's between 7 and 8%. And that's been statistically correct for like the last 20 years. There's always 7 to 8% of all businesses in existence that are available to buy. Now, there's only about 258,000 deals actually get closed every single year. So it's about a 1 in 11 hit ratio. It's even worse in the UK. In the US, and the general average is about 1 in 11 because US is clearly the biggest market. So if we look at all the businesses that don't sell within those 12 months, we're talking nearly 2.7 million businesses, and those are our target market. You might be asking, well, why 1 in 11? Well, there's four main reasons why a lot of businesses don't sell. So number one, there's not enough buyers that really know or follow a proven process. So I'm not coaching them. They're not in any of my programs or my masterminds. They don't understand the process of buying a business. Number two is they don't understand leverage. You'll get leverage being a real estate investor. If you find a business that's worth $1 million, or you find a piece of real estate that's worth, say, $300,000, you and I both know in either case, you don't need to rock up to the closing table with a personal check for all of that money. You can leverage the transaction. Now, a lot of business buyers don't get that. So you're way ahead of those people being a real estate professional because you know how that works. Number three, some of the businesses, but not all, they're not adequately groomed for sale. So the owner and the business are the same. It could be a one-man company, or the company's existence is 100% kind of decided by the owner. All the sales relationships are with them, all the processes are in their head. The business effectively won't work if the seller's not there. So I'll show you how to weed those out. And then number 4, where a lot of business buyers fall short or a lot of businesses don't sell, is just the access to capital, that other people's money that we talked about in number 2 to close deals. And what we're talking about, guys, is something that I learned on Wall Street. It's called a leveraged buyout. Now, you're doing LBOs in real estate. It's no different in buying companies. We're talking about buying a company and then whatever capital is going into that deal, it's all about using other people's money. And we'll get into that a little bit later. And there are some parallels, as I've mentioned, between real estate deals and business deals. And there's kind of an overlap where you've got businesses that actually own the real estate or they're backed by the real estate. So it could be an engineering company or a manufacturing company or a transportation company that owns the facility that they trade out of, or it could be a business that's heavily backed by real estate, like a hotel or a restaurant or a bar or a retail store or an entertainment facility like a bowling alley or a cinema or something like that. So that's the market difference between businesses and real estate. Let's go on to point number 2. How do you find unlimited distressed deals? So I want to introduce you to a tool called the Perfect Deal Triad. So every deal that you look at has to tick 3 specific boxes. Now, my perfect deal is going to be very different from your perfect deal. So let me explain. So it all starts off with picking a deal, picking a sector that really satisfies your requirements. So it's a sector that you know something about, it's a sector that you've got some passion about, and it's a sector that you can leverage your skills, leverage your interests, maybe even leverage your network for adding value to the business post-closing, even if you're not depending on running that business going forward. Because there's a difference between being an owner investor like me and being an owner manager. There's no issue you buying a business and going in and operating it yourself. Thousands of my students do that. Nothing wrong with that. A lot of people, they get the entrepreneurial bug. They don't want to work for somebody else anymore. They want to be a business owner, but they want to get in there, roll their sleeves up and grind out and do the work. That's not me. I'd rather own multiple businesses in multiple countries all over the world, which I do, and then have general managers run those businesses for me. And we're going to get into that a little bit later in the training. So figuring out your work-life balance is really important. Now, I'm guessing you being a real estate investor, you enjoy kind of passive income without having to do a lot of work for it. So I'm guessing you're probably going to go down the owner investor route. So you're going to enjoy some of the training that I'm doing a little bit later. And size, we're targeting deals in the $500,000 to $10 million in revenue. And our sweet spot really is in the $1 to $5 million range for businesses. So when you go above $1 million in revenues, and definitely when you go below $500,000 in revenues, this is the business that generates the revenue, then what you find is those kind of either one-man businesses or the business that the kind of owners doing the vast majority of the work. When you get above $500,000, say in the SaaS sector or the technology sector, and then kind of north of $1 million in any other sector, you find that the business has got infrastructure, it's got management, it's got employees, it's got systems and processes. That means the business works when the owner's not there. And that's kind of the perfect business that you can buy. And then when you go above $5 million in revenues, and more importantly, above $10 million in revenues, then number 1, there's a lot less deals, but number 2, there's a lot more competition. So that 1-in-11 ratio, that's kind of where we are in this 1 to 5 million range. When you go above 5 million or more above 10 million, then it's like 1 in 2 to 1 in 3 of those deals that close, because there's a lot more competition from competitors and complementary businesses and also private equity investors as well. So 1 to 5 is really kind of the sweet spot. Now, point number 2 in the perfect deal triad, and this is what this is all about. It's finding distressed sellers of good businesses. These are business owners that are done with the business. They want to sell the business. They've got a high motivation to exit. And this was one of the big differences that I learned between doing corporate deals on Wall Street and doing smaller deals on Main Street, which are actually a lot more fun. So on large deals, billion-dollar deals and so, which I've done lots and lots of those in my corporate life, those deals are 10% about psychology, but really 90% of it's about math, it's about numbers, it's about financial engineering. You know, if you're Hewlett-Packard and you want to spend $1 billion on a software company, which we did a lot of times, you just issue new shares, give them to the seller, and boom, let's go. You can pay whatever you want in terms of a valuation, because your valuation, your PE ratio, which is how public companies are valued, is going to be a lot bigger for HP than some of the companies that we're targeting. So that's how big deals get done. On Main Street, it's completely different. So in that $1 to $5 million revenue range, these deals are only 10% about numbers, but 90% about psychology. So let me give you an example. Before I do that, I want to talk to you about valuation. So real quick, valuation is all about multiples. So I mentioned it before in terms of PE ratios. For small businesses, it's a slightly different analysis. So we're using the operating profit of the business. Sometimes that's called EBITDA, sometimes that's called SDE, sometimes that's just called free cash flow. But to all intents and purposes, they are the same with a few minor differences. You know, how much profit or cash does the business generate per year? And then a business is worth a multiple of that. And there's two things that drive the size of that multiple. One is the sheer size of the profit. So the bigger the profit, the bigger the multiple. It compounds. That's why a company like Apple right now is worth 24.4 times its operating profit, whereas a very small business is worth something in the 2 to 2.5 to 3 range. What also drives the size of the multiple is just how unique and special and badass the business actually is. So if you've got a business that's high niche, high growth sector, high margin, it's fully optimized, there's loads of IP or loads of barriers to entry, and you have a seller that's not really motivated, that business owner might want a pretty high multiple. So we'll stay away from those types of businesses. So some SaaS businesses are kind of like that. Whereas on the opposite end of the spectrum, what we're looking for are generalized types of businesses that maybe aren't growing that well. They've got low margin. They're good businesses. They're generating cash flow, but they could do with a little bit of a kick in the butt. There's a lot of untapped growth that the seller's not really capitalized on. That business might be lacking some optimization, but the key here is you've got a motivated seller. Now, across all those 200,000 plus deals that were sold in 2020, the valuation multiple was about 2.72 times the profit. So I just want you to bear that in mind, because I want to give you a scenario. Now you're going to see why seller motivation is so important. So let's say you've got two completely identical businesses. You go out there, you start doing some deal origination with a strategy that I'm going to show you in a minute, and you go and find two completely identical businesses. They've got the same revenues, the same profits, the same assets, they've got the same customers, they've got the same products or services. They're in the same building. They're in the same town. They got the same logo. Everything is exactly the same, but there's one difference. The difference is the owner of the business. Take the guy on the left. He's an entrepreneur. He's in his 30s. He's happy. He's having fun. Being in that business is a pleasurable experience for him. Now, every business is for sale. Just a question of how much you're prepared to pay. Every business is for sale. If you've got $3 trillion right now, you can go buy Apple. Nothing's not for sale. So this owner might want a 5 times multiple of the profit. So he's kind of high up that scale. But more importantly, he might want most of his cash at closing. You might go and find a piece of real estate that the seller loves. It's their dream home. They don't want to leave. They'll sell you the property. You're going to have to overpay and pay most of that money at closing. What we're looking for is not that guy. We're looking for the guy on the right. Again, same business, but this owner is driven by his motivation to sell. Let's say he's a retiring baby boomer. There's 10,000 baby boomers retiring every single day in North America. And 26% of them, according to Forbes and the Wall Street Journal, own a small business. So there's millions and millions of businesses coming to market every single year. This business owner, he's frustrated, he's burnt out, he might be distressed or depressed, he's not happy, not having any fun. It's not translating into business performance, it's still generating cash flow, but he just wants out, wants to go do something else, or could be an entrepreneur that's bored and kind of wants to move on to the next big thing. So that owner would likely sell at 2 to 3 times profit, and more importantly, allow you to pay for the vast majority of the deal in a deferred payment structure, which is called seller financing. So we're going to get into that when we get into deal math. The third tick in the box, the third requirement that you need is you need a business that's got cash flow. It needs cash flow because we're going to use the cash flow to pay for the business, and we can always use the cash flow as well to raise financing to buy it via the SBA 7A loan program or thousands and thousands of other sources and structures, which I'll share with you. If the business has got assets, great. If not, it doesn't matter. As long as it's got cash flow is what we need to make these deals work. So these are the 3 things that all of your deals must have. It must be a deal that's in your lane, fit your requirements. It must be a distressed seller of a good business with a high motivation to exit, and it's gotta have cash flow so we can use that cash flow stream to buy the business. Now let's talk about deal origination methods. Now you know as a real estate investor that having a steady flow of leads is key to building a consistent and sustainable investing business. Now business acquisitions are no different. There are 4 primary methods of originating deals. There's business brokers, there's relationship networks, there's direct approaches, and there's leveraging social media. Let's spend a few minutes just going through each of these 4. Business brokers is the quickest way to start. So bizbuysell.com is one of the largest business broker websites in the United States. It's the MLS of business buying. A lot of other business brokers profile their deals on that site. You've also got deal sites like DealStream, you've got Transworld, you've got Empire Flippers and Website Closers and all those guys in the online space. But there's thousands and thousands and thousands of other sources. There's even big franchise networks like Transworld. There are literally tens of thousands of business brokers out there. So let's go and have a look at bizbuysell.com and you'll see how easy it is to find cash flowing deals. So let's open up the website. So let's go to bizbuysell.com, and what you can do with BizBuySell is you can search by state, by city, by county, and you can search across a whole bunch of different industries. You can also search for franchises as well, but I don't advocate buying franchises. Go and buy a unique business. So I think Florida popped up on there. So let's go look at Florida, big state. So you can look at Florida and then you can search by all the different types of industries. So let's look for something in the home services industry. I guess that would be a really cool place for a lot of real estate investors to start, because if you go buy a home services business, then you could leverage that into your real estate portfolio. That would be pretty cool, wouldn't it? So let's go and have a look at that industry. So it's just services businesses generally. So we might get a lot of stuff in here that's not really relevant, but we've got pool franchises, we've got pool routes, we've got marketing businesses. That's a little bit weird. Those numbers I think are an anomaly. There's no way that's $1 million deal, but it's cranking $11 million in cash flow. If it is, I'm getting on a plane right now. I'm going to stop the training. I'm going to go buy that business. I think that's probably an anomaly. But what you see, you got FedEx routes in here as well. The top number is the asking price, and the bottom number is the cash flow. So again, you're dividing top number by bottom number, and you really want to be doing deals where that multiple is kind of less than 3. So that'll be an interesting deal because it's less than 3, but I don't particularly like franchises. That's a good multiple as well. There's some really cool businesses in here. Some of them are big, some of them are small. That's a pretty interesting business. Hardscape and Landscape Supply. It's cash flowing to $750,000. It's got real estate included as well. So that's like a combo deal. And that's a $2.7 million asking price. This looks a really cool company. Regional Landscape Irrigation and Paving Company. So imagine you had a real estate portfolio and a lot of your properties needed some kind of yard work. You buy that company, you can probably double the size of the business pretty quickly by injecting it into your portfolio company of properties and maybe some friends and associates that you got as well. And all you do is you basically click on the link of the deal and it gives you all the information. So the seller wants $1 million for this business. That's a psychological number, by the way. You might have noticed with some of the others that they've been calculated a bit more exactly. So that's kind of the psychological number that the seller's looking for. It's doing $443,000 a year in free cash flow. So that's a really nice multiple, about a 2.2, 2.3 times multiple. It's doing 2.8 million in gross revenues. Doesn't really have any assets, but we don't care about that. It's got cash flow. We could use that cash flow to buy that business. But all you need to do, guys, is just put your name, phone number, and email address in here, click send message, and then the broker, so Mike Galeno, who's the broker for this particular deal, he's going to be sending you the deal information within a matter of hours. So this is how easy it is to use a tool like BizBuySell. So BizBuySell and other business brokers, you're going to have likely a bit of competition in those deals. Not a lot. It's not like the real estate market with MLS, but you will have other people looking at those deals. What I prefer to do, and it's just an option, is to do off-market deal origination. So it's finding deals that no one else has access to. And one of the ways we do that is we leverage relationship networks. Now, as a real estate investor, you're already going to have a relationship network of wealth managers, accountants or CPAs, lawyers, banks, and financiers. And these are the perfect intermediaries to build relationships with in the business buying marketplace. So I'll give you an example. If you're a small business owner, before you go anywhere near a business broker, and about 20% of deals that sell actually go through brokers, the other 80% go through relationship networks, direct approaches, and connections on social media, which we'll cover in a minute. But what a business owner will do before they list with a broker is they'll call these people. They'll call their wealth manager, they'll call their accountant and CPA, they'll call their lawyer, they'll call their bank or their financier that's partnering with them in the business. Wealth managers are amazing because these people love building relationships, especially on LinkedIn or at networking events. So you call wealth managers and they're primed for somebody to sell their business because the owners call them and say, hey, I'm looking to sell my business in the next 3 to 6 months. How much do I need to invest in the markets with you to give me, 5K or 10K a month in passive income? So that often drives a lot of these valuation numbers. So if you're networking with all these people, you're going to get access to deal flow. Direct approaches is one of my personal favorites. So when I started being a business buyer back on Wall Street in the 1990s, we didn't have Google or Facebook or the internet or LinkedIn or any of those things. We used to write to companies and see if we could acquire their businesses for clients. So it's very simple on Main Street. You go build a list. There's loads of free online resources, or you can get free trials of a lot of the popular ones like Hoover's D&B and Salesforce.com. You can get lists of different companies by NAICS code or industry type per state. So you can say, hey, show me all the businesses in web design. Let's say you want to buy a web design business. Show me all the web design companies within 50 miles of Chicago between $1 and $5 million. And boom, you'll get a list, you'll get all the seller information, and then you can write to them. You write to them in a highly tailored way, a very confidential way, and then a percentage of those will be interested in talking to you. You go meet them and you go build a solid relationship. Social media is a key tactic. So I use this specific post, which you can swipe to get me 67 leads in the engineering sector. This was in the UK. So very simple. Hi, some of you know I'm looking to acquire my own business in the engineering sector, specializing in whatever. This was in the automotive space and located within, in my example, it's within 50 miles of Manchester, England. If you know of any small businesses looking to exit, blah, 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 with revenues between whatever your focus is, 1 to 10 million, 1 to 5 million, whatever, let me know. I got 67 leads and I bought 2 of those businesses from one post. Took me 25 seconds to write. So that's how you find lots and lots of deals. Now let's go through business buying math. So here's the typical deal structure. So the total deal consideration that we're going to be offering the seller comprises of three things. So first of all, if the business has any liabilities inside of it already, we're going to include that as part of the deal. In a lot of cases, we're going to be offering a closing payment, although that can be quite small. But the majority of the deal is always going to be made up of these future payments, what we call seller financing, and we can always pimp that up as well by using something called an earn-out, which I'll get into a little bit later. And then by doing deals, there's really three ways to profit. So the biggest profit is when you buy a business, you grow it, and then you sell it. So that would be for you like acquiring a rundown property, renovating it, and then selling it for a big premium. You also, as the owner of the business, get all the monthly cash flow to your business. If it generates $50,000 a month in free cash flow, that's your money because you're the owner of the business, whether you're operating it or not. And then in a lot of cases, you can actually make cash at the closing table. You can raise more financing than the business actually needs to be acquired. Or even if you're doing a 100% seller financing deal, if the business has got some cash inside of it that it doesn't need, you can take that off the table and go do other things with it. So let's look at a simple deal structure. So let's look at that. This would apply to the business we saw on bizbuysell.com. Let's say, even though it had $1 million ask, that the seller would take $850,000 for that business. And let's say we did a deal where we split it in half. So we paid $425,000 as a deposit or a closing payment, and then we paid $425,000 in future payments. And then let's say we're able to go out, and based on the strength of those cash flows, we were able to go and raise, say, $500,000. We'd probably get a lot more on cash flows of, say, $361,000 a year. You can generally get at least 2x as a cash flow multiple. So in some cases, 3 in the tech and SaaS space. But let's say we were able to go get $500,000 in financing from the SBA or from any other lender. And so what we've now got is we've got $500,000 in financing, but we only need to pay $425,000 to the seller. So that gives us a $75,000 surplus. You might have $10,000 or so in closing costs with lawyers, etc. However, you're going to be able to walk away with some money at the closing table, or you might want to keep it in the business and use it to grow. Completely up to you. So there's 6 ways to finance deals. So you can use surplus cash that's in the business, you can use seller financing and or earn out. So this is using the future cash flow of the business to pay the seller. Earn-outs are kind of bonus payments. So if you've got a valuation gap between what you think the business is worth and what the seller actually wants, you can bridge that through an earn-out structure, which gives sellers bonus amounts if you blow the numbers up considerably going forward. If the business has got lines of credit already in place, you can leverage those for closing payments. You can always go down the equity route. If the deal's big enough, you can go to the private equity markets, but generally we're talking about angel investors, and there's hundreds of thousands, if not millions of them inside of the United States. They will give you equity to partner with you inside of the deals. And I guess this is what you already do in the real estate market, so none of this is news. Asset-backed loans, so this works brilliantly with real estate. If you buy a restaurant, and the seller owns the real estate, you can get a nice 70-75% loan to value mortgage on that real estate. That could be the entirety of the closing payment, and then you can pay for the rest of it over time. And one of the most popular financing strategies right now is cash flow lending, and this was pioneered in the States by the SBA, the Small Business Administration. They have 2 loan programs. One's called the 7A loan program for businesses, and the 504 loan program if the business owns real estate and the real estate is at least 50% of the total combined deal value. So you can finance these deals between 10 and 25 years with as little as 5% down in cash, which doesn't need to come from you. It can come from an angel investor if you've not got the cash yourselves. And the federal government guarantees up to 90% of the financing. So the government's making it so easy now to do deals and raise capital. So let me take you through a comparison on returns between doing real estate deals and doing business deals. Let's do a buy and hold example. And then let's do a flip example. So let's say you're going to buy a $300,000 piece of real estate, and you know that you'd probably need 25% of that as equity invested. So you're putting $75,000, either yourself directly or through some equity partners, into that deal. And let's say you've got a 3% rental yield net of PITI. So you've got a gross rental income of about $9,000 per year. And then let's say you've got a $3,000 per year maintenance and carry costs. So you're going to your net free cash flow from that deal per year is going to be about $6,000. So that's going to be an annual ROI of 8% versus the $75,000 cash that you've invested. And you might think, well, Carl, that's a really awesome deal. I do those deals all day long. Let me show you what would happen if you invested the same amount of money in a business acquisition. Now, business acquisitions, you get a lot more bang for your buck in terms of the purchase price. So let's say we have to pay a 10% equity down payment on a deal. That means for $75,000, we can buy a business at $750,000 purchase price. And let's say we're paying a 3x multiple for that business. So we've got $250,000 per year in cash flow. And then let's say our debt service on that, capital and interest, is about $80,000 a year. It would be a lot less if you did the SBA because you can cash flow over a longer period. But let's say it was $80,000 a year. So even before you grow that business, you're generating $170,000 a year in net free cash flow based on a $75,000 equity investment. So your annual ROI is 227%. It's crazy the difference that you get. And let's look at flipping. So let's say you do a flip deal. So you buy a $300,000 piece of real estate, same 25% in, which is $75K. Then let's say you're going to spend $60,000 improving that real estate. So you're investing a total of $135,000, either yourself or via partners as well. And then let's say you flip that house for $425,000. So you've made a $65,000 profit, which would be a 48% ROI. Not bad. That would be a pretty awesome deal in my opinion. But look at what would happen if you did that in the business side. So let's say you bought the same business, $750,000. You put the 10% in, which is $75,000. Again, it was a 3x multiple of the $250,000 annual cash flow. But then just by making some quick improvements, you could just take out some non-essential cost or just add a little bit of growth to that business. And you could sell that with cash flow at $350,000. And then if you sell that at a 4x multiple, as you know, the profit goes up, the multiple goes up. You're selling the business at $1.4 million, which means less the debt that you've taken on to acquire it, which you'd settle as soon as you exited. You're walking away with $650,000 in profit, less repaying the debt. So that's an 867% ROI. So again, it's a 20x difference in the types of returns that you can generate. It's absolutely unbelievable. Now, what's also really cool is I have about 8,000 students inside of my Dealmaker Wealth Society family. About 50% of students go and buy businesses to own and operate. That's fine. About 35% want to be like me, and I guess where you're at, they want to be owner investors. And then about 15% will do something called consulting for equity deals. So they'll broker deals and they'll jump in and get involved in a business for 30 to 50% of the action to help that business grow. But ownership is really cool because you don't have to do it. If you want to be an owner manager, general manager, that's completely up to you, but you've got to be in the business every day. You're the operator, you're working in the business, not necessarily on the business. It's all tactical stuff. And you're going to want to do a deal that's pretty close to where you live. So if you live in Boston, then clearly you're going to be buying businesses in Boston if you want to be an owner manager. Or you can buy a business in a place that you might want to live. You might want to move internationally and use acquiring a business as a massive shortcut to, kind of immigration into that place. Or being an owner investor, for me is super, super cool. And I think this will resonate with you a lot more because you can buy and own businesses remotely. So I own businesses in the UK, the US, and Australia. I've not been to Australia for 2 years because of COVID. I'm going in a couple of weeks. And I still own businesses down there. It's amazing, and they're doing very, very well. So you're more of an investor. It's a different kind of mindset. You're working on the business. So you might add value to the business strategically. You might leverage your network and set the vision and the path for the business to grow, but you're not grinding in there every day, keeping the train on the tracks. And then you might get involved in mergers and other acquisitions. You might buy an engineering company and then decide to bolt another one onto it. There's loads and loads of really cool stuff that you can do whilst never, ever actually having to go into the business to operate it. So if you don't run the business, well, then who does? Well, the seller can stay on and run the business for you. A lot of them do. You could go and get a deal partner. You might find somebody that's a solid operator that'll run the business for you, and they might want 10 or 15% of the ownership. That's completely fine. Give them the equity. There might be a solid number two in the business already. One of the questions I ask sellers when I meet them is there a solid number two in the business? Who runs the business if you're not here? If you're sick or on vacation or doing something else, playing golf, who runs the business? I find out who that is. I'll make them my deal partner. I'll give them 10, 20, even 30% of equity in some cases. They're my partner. They're driving the business forward. They're driving my value creation. They're driving those unbelievable returns that I've just shown you. Or if there's no solid number two in the business, you can find one very quickly on LinkedIn or Indeed. And there's loads and loads of operators out there that never want to own a business, but they're happy to go in and run it for you. But always be generous. Give equity to these people, because then they're your partner. They'll bleed for you. They'll die for you. They'll run through brick walls for you, and they'll help drive your wealth creation. So that's it. What now? We've been through some stuff. We've only really scratched the surface. You can take this training. You can do this yourself, or why don't you work with me and let me coach you through all the details. Let me go through this in detail with you in an unbelievable program that I've designed so that you can get a level of mastery as you go out into the marketplace and you do this for real. And it's like golf. So I love this picture. It's like Tiger Woods, who is my favorite all-time golfer. He's walking around the golf course every day with his son, who in his own right is becoming an absolute badass golfer. So imagine you wanted to play golf and Tiger Woods walked around with you every single day. He's correcting your swing, your stance, your grip, the run of the greens, the wind, or the club selection, all that stuff. So partnering and working with me is like me being your Tiger Woods in the business buying space. So I can work with you for a period of time and really help you smash this and master this in the marketplace. So my big promise is, if you come into one of my programs, and I'll talk to you about in a minute, if you complete all of the course requirements and you do all of the work that I'm going to set you, you will have the ability, I guarantee, to make a fully funded offer and have it accepted on your dream business within 10 days. Let me explain. Let's take a sneak peek at this absolutely unbelievable program. So I'm going to talk to you about an unbelievable program I've developed called the Dealmaker 10-Day Launch. So it's a fast start, intensive program. It's an introductory program into deal making, and it's one of the, if not the best introductory program that I've ever created in my life. It's absolutely phenomenal. It's designed for you to log in every day for 10 days, do a maximum 45 minutes to an hour of work. And within 10 days, if you pull the trigger, if you do all the work, you will have a fully funded offer accepted on a business opportunity. And it's absolutely fantastic. The first thing that we do is we talk about mindset. Mindset's really, really important. I get you into the zone and get you super hungry and focused on your fuel, your passion, why you want to do deals and what it's going to mean for you. So you'll have that ability to kind of smash through any obstacles that you're going to get. Day 2, we talk about deal specification. So I'll really take you down the rabbit hole of understanding, what type of businesses should I be buying? What sectors, what locations? Do I want to be an owner manager versus an owner investor? Well, they'll also build you a wealth creation plan, which is really, really cool. So you can look at this and think, okay, well, let's say this is a 3-year project for me and I want to make $5 million. for the types of businesses that I want to buy, how many deals would I have to do? And it gives you that kind of North Star, that guiding light for your deal making journey. And then what we do on day 3 or part 3 is we get into deal origination. So I walk you through the whole prospect of building a deal origination funnel and deal origination machine, that once you set it up, and it's really quick to set up, it will feed you for life if you want it to. You'll get deal flow every single day once you do a few simple things, which is amazing. And then if you get too many deals that you can do on your own, you can give them to other people and get referral fees and even get free equity in their businesses. So deal origination is really the key to this. And then days 4, 5, and 6, I kind of go really deep down the rabbit hole around the 4 methods that I briefly touched on as part of this training. So I walk you through all of the elements of working with brokers, what to do, what not to do, how brokers are incentivized, and how you can build relationships with them. We then go deep into the direct approach, and the direct approach template, I'm going to give you that, which is absolutely phenomenal. And then day 6, we're going to go into building relationship networks, how to do that quickly using LinkedIn, and then also how to leverage social media, like LinkedIn as well, and Facebook, Clubhouse, all these different social platforms now that you can use to get groups, which is fantastic. Then on day 7, I'm going to walk you through how to completely nail the perfect seller meeting every single time. I give you my complete seller playbook for meetings. What questions to ask, in what order, how to build phenomenal relationships with these people. Absolutely fantastic. You'll really enjoy that. Then day 8, I walk through the concept of a non-disclosure and how to get the numbers that you need to be able to analyze the deal. And then day 9, it's my favorite, we're going to value and structure the deals. And you're thinking, well, Carl, I've never studied accounting. I'm not a certified public accountant. I don't like numbers. I got you covered, buddy. I've built you a model that you can value, structure, and finance the deal in under 15 minutes. The record's about 2 minutes because we did a time trial with some of my students on this. Absolutely phenomenal. So it would literally, it cost you $10,000 to hire somebody to build this model. I've built it for you, and I'm going to give it you as part of this program. It's amazing. And then once we've valued and structured our deals and we know where the money's going to come from, then day 10, we start making offers, and I give you all of the different templates that you can do that. So this is like a crash course in deal making that will absolutely transform both your life and your understanding of this process. It's absolutely unbelievable. So that's my Dealmaker 10-day launch program and system. Now you're probably asking yourself, great, Carl, let's go. How much is this? Is it like $50,000? Well, no, it's not. It's a $997 investment. However, it's not going to cost you even close to that today. Let me explain. There's also some really cool bonuses that I'm going to give you. So I'm going to go a lot deeper on using Biz Buy Sells because it's a great way to start to originate deal flows. That's $197 value, which I'm going to throw in as part of this offer. What I'm also going to do is give you that direct pitch letter script. So it's a template that I've designed and tested and perfected over 20 years. It's a $497 value because we sell that every day. I'm going to give you that as part of this. And what I'm also going to do, and this is just, I can't believe I'm doing this, but I'm going to do it anyway. So I have a program called Dealmaker Academy. It's a $10,000 a year group coaching program where I've got a couple of hundred students that I work with on a weekly basis on calls, and we review their deals. I'm going to give you a whole bunch of those deal review recordings. So you're going to be able to look at a whole bunch of different deals in the UK, deals in Canada, deals in Australia, all different sectors, all different sizes. And we're going to show you how we break those deals down. What questions we ask. What are the red flags potentially in this deal? How would you structure and value this deal? Where's the financing going to come from? And then how would you grow the business once you've acquired it? What are the opportunities? And then we either give the deal a red light. It's called the red light, green light call, RLGL. It's either a red light, which is, don't pursue this deal, move on to another opportunity, or it's a green light, proceed, make an offer, and let's take this deal forward. And it's absolutely phenomenal. I'm going to give you a whole bunch of these, and then you can go through, and it's really going to help you master the art and science of doing deals, because you'll get to see what everybody else is doing. And these are $10,000 a year students of mine. You're going to get to look over their shoulders as they do these deals. It's a $497 value at least. I could probably charge that for each of the calls I'm going to give you, and I'm going to give you a bunch. So there's extreme value in this program, guys. We're talking over $2,100 worth of incredible stuff. I'm going to give you the 10-day business buying launch program, which is a $997 program that you can buy every day. You've got the bizbuysell.com training. You've got the perfect seller letter script at $497, and you've got those deal review recordings, which I'm going to give you. So it's $2,188. Now, I'm not going to charge you that. $997 is the normal retail price if I included all those bonuses. But I sat down with my team and I said, let's do something really amazing for people to get them started into deal making. What would be an absolute no-brainer for people to kind of come in? What's a really low-cost investment? And we decided on $497 as an investment to come in to the Dealmaker 10-day launch. But then I thought, well, you know what? You guys have just spent like 45, 50 minutes with me, and I want to reward that. So if you're still watching this, it tells me that you're serious. So I've decided to let you in. I can't believe I'm doing this for only $197, because it's not about money for me, it's about impact. I want you to pay something which will sharpen your focus. If I gave you this for nothing, you wouldn't even log in. We don't value things that we don't pay for. So I'm thinking $197, it's not going to hurt you. It's a couple of nice dinners out. It's enough to get you started, to go through this program and make some absolutely great moves and get into deal making as a way of life and as a future for you. So I'm also going to give you two guarantees. I'm going to make this like the craziest no-brainer opportunity you're ever going to see in your life. So I'm going to let you trial this program risk-free for 30 days. There's a bunch of things I need you to do. So I want you to go through it. If you're just going to buy it and not use it at all, don't buy it. If you're going to come into this but you want a risk reversal, then as long as you do a whole bunch of different things, as long as you go through the training and you do the work that I set you and it doesn't work for you, I'm actually going to give you a full 30 days to test this out. If you do the work and it doesn't work for you, no harm, no foul, we'll completely refund you. But then I'm also going to give you a completion challenge. So if you do all the work and it does work for you, which it will, I'm going to give you a 100% refund if you have an offer accepted within 10 days of enrollment. So you're covered if it doesn't work, and you're covered if it does work. So it's absolutely phenomenal. I want to reward people that are going to take action and are going to do the work. So I've made this unbelievably safe for you to come in. And this is what Jeremiah did. He's one of the students that came through this program. He got a refund because he came in December of last year, and I think on day 8, he'd got an offer accepted on a deal. So he was 8 days in, he sent me the actual DocuSign of the deal, and boom, he got his money back, and then he closed that deal, and then he's come into my Academy program, which is absolutely fantastic. So it's definitely something that I want to do for you guys. So if you want to do this with me, and I know you do, there'll be a button somewhere around this video. Just click that button to enroll, and I will definitely see you inside of the program. And when you click the button, you'll go through to this page, put in your name, email address, your billing information, either your credit card details, or you can pay on PayPal if you want, and then complete the purchase, and then you are in the program. Take you about 60 seconds to do it, and then you can start going through this training, which is amazing. So again, got some great people that have come through this: Mike Connolly, Dave Evans, Kevin Dillon, absolutely unbelievable. He's closed 5 deals. I think this is a little bit old. I think he's now at more like 10. He's doing a big roll up of medical facilities. He's buying doctors' practices down in Australia. So absolutely phenomenal. So click the link somewhere around this video, jump onto this page, fill in your details, And then within a minute, boom, you're in, you're part of the Dealmaker family, and we can start working together to close your first deal inside of the 10 days. And again, let me just remind you of the amazing benefits of becoming a business owner, the freedom that it will give you, the work-life balance that you can have. If you don't want to work on a particular day, you don't have to, because you've got people running the business for you and you're making money while you sleep. It can build you unbelievable wealth, generational wealth. The cash flow that you'll generate, especially if you buy multiple businesses, you're just stacking salaries on top of each other. It's absolutely phenomenal without you having to stack jobs. The pride and assurance that it would give you to become a business owner. Imagine going into the pub or the bar with your friends or on the golf course and saying, you know what, I'm no longer an employee, I'm now an employer. I don't work for people anymore, I work for me. I'm driving my own life, I'm driving my own destiny. It's really, really powerful when you can shift yourself into that position. And this is what Coston did. Coston was an accountant in London and decided to take his financial skills and go start buying businesses. That's him with his tombstone. I think he's done 6 or 7 deals now, which is absolutely phenomenal. Doesn't work in any of those businesses. Del McClay was a life coach, and I remember talking to her and said, hey, what kind of deals do you want to do? She says, I want to buy scaffolding businesses. I said, well, that's very interesting, Adele. What do you know about the scaffolding industry? She says, nothing, but I've got an amazing partner in David, and he and I are going to go and buy all these scaffolding businesses. And she's bought an absolute boatload of them in the UK and is doing phenomenally well. We've got Chris Matthews, who went on a weight loss program via a clinic, ended up buying that clinic, no money out of his own pocket, then bought 6 more, and then bought the distribution company that provides all the nutritional supplements. So he's building a multi-7-figure weight loss empire, and it all started with that first deal. Tyrone Cole, who's actually now built an investment company off the back of all of the deals that he's done. He's based in California. He's buying engineering businesses and manufacturing businesses. That's him with his deal tombstone. So we covered a lot today. We went through the 5 key parts of the training: the market for deals, what your perfect deal needs to look like and where to find it, how to structure deals, how to finance deals using other people's money, and then who's going to run the business if you don't want to. I've made you an unbelievable offer of only $197 to work with me inside of a Dealmaker 10-day launch program and system. It's a one-time payment. You've got lifetime access. It's an absolutely unbelievable program that we've built for you. And I gave you 2 no-brainer guarantees, like mafia offers. You can't refuse these. You can trial the program risk-free for 30 days as long as you do the work, and then you have that completion challenge. If you do all the work within 10 days and you get that offer accepted, as long as you can prove that, you will get a 100% refund. So you're covered if it doesn't work, and you're covered if it works. I can't do any more than that. So thank you very much. Let me just turn the slides off so that we can do a final recap. All right, so let's wrap up. So over the last 45 minutes or so, you have seen the value of what I can teach you in the art and science of buying businesses. And I've made you an unbelievable offer to continue working with me, the Dealmaker 10-day launch. Now, this offer closes, by the way, in less than 72 hours. So let me ask you, what's your gut telling you? If you're still watching this right now, it's because you want to learn how to buy a business faster, and your gut is telling you it's probably a good idea to enroll in my Dealmaker 10-day launch system. And if I can give you just one piece of advice, it's this: listen to your gut. Now, if I hadn't listened to my own gut back in 2008, when I abandoned the corporate world to become an entrepreneur, my life would have been way different. I wouldn't have the wealth that I have now, the network that I have now, the endless opportunities that I have now, and the freedom that I have now to choose my own path, set my own hours, and live the life of my dreams with my family. So if your gut is telling you to go deeper with me inside of my Dealmaker 10-day launch system, that's the right thing to do, then I sincerely urge you to listen to it. I just did some back of the napkin math. My decision to become a Dealmaker has saved me 37,440 painful hours working for someone else. And it's generated me at least 8 figures in wealth creation since that pivotal moment back in 2008 when I listened to my own gut and I made that massive call. Now, if I spread that decision across my incredible student base, the impact is way beyond that in terms of wealth created and the painful hours saved slaving away for others and driving their wealth creation. We're talking hundreds of millions of dollars easily. So may I ask you a personal question? We both know that there's a risk to going deeper. Perhaps you won't like my Dealmaker 10-day launch system. That's why there's a 30-day money-back guarantee. It protects you if you do the work and it doesn't work for you. I'll also refund you if you successfully complete the protocols within the 10 days, just like Jeremiah did. Perhaps you won't do the work. That's why we push you and keep you accountable inside of our private members Facebook group. Now, there are no shortages of what ifs in life, but here's the most important what if of them all. What if you make this work? What if you don't just close a deal, but you do it really quickly and you start making money quickly? Seriously, just take an arbitrary guess and just write down what one good deal may be worth to you. $100,000, $500,000, $1 million, more. Now compare that to the risk of not going deeper with me. Here's the personal question. Is it worth it? Is success for you worth that risk? Now for me, it is, and it always has been. Now if you're like me, you want more for yourself and more for your family, and your gut is telling you that it's the right thing to do, enroll. Let me coach you inside of my Dealmaker 10-day launch system. Go to the enrollment page. This offer expires in less than 72 hours. This may be your only shot to get in for $197 investment. At the very, very least in the future, you're going to have to invest the full $997 and you won't get all those bonuses. So make the call. Don't find yourself 1 year from now looking in the mirror and saying, wow, look at me. I've just not progressed at all. I should be so much further ahead from where I was just a year ago. If only I enrolled into the 10-day launch, I could be the owner of multiple businesses right now. If only I'd listened to my gut and I'd said yes. So that's it, guys. Thank you for watching. Make the call and I will see you inside of the 10-day launch. Until then, my friends, bye for now.